Hi, welcome to this discussion with Roubini Global Economics. I am Parul Walia, Economist for Western Europe and Finance and Banking. And with me is Mikko Forss, Economist for Western Europe. Welcome, Mikko.
Thanks, Parul.
So, Mikko, I'll start off with monetary policy in Norway. So today the central bank, they had their monetary policy meeting. Can you give us more details if the decision was in line with what you were expecting?
They managed to surprise us as they cut by 25 basis points. While we had expected them to remain on hold. And this is a bit surprising given the recent good signs in the economy. And they made a surprise cut in December of 50 basis points. And it seemed that they were following their downside scenario, which was published in their earlier monetary policy reports. But the recent good data implied no cuts, but nevertheless they did cut. And the main reason for this is that though the domestic economy is strong, but the monetary policy decisions are largely affected also by what happens abroad. Global interest rates, global growth, Norwegian money market premiums, all this is being affected by not least the Eurozone crisis. And so these were the factors pulling down the rate path more than we had expected. And a particular concern for Norway's central bank is the strength of the currency. It is at its strongest against the euro for 8 years, and in trade-weighted terms it's almost as its strongest ever. So this affects Norwegian inflation by import prices, pushing it down, and it's well below the central bank's targets, as well as the competitiveness of Norwegian corporations outside the oil sector, the Dutch disease issue. So these factors were given a lot weight also in the report. And as a result, they decided to lower the rates. So there is one more interesting aspect on this rate decision, and it has to do with the Norwegian central bank guarding against financial imbalances, which is a current discussion among the global monetary policy makers. And so now they are explicitly giving weight to how much the current rate deviates from the normal rate, which they consider to be 4%. And this is a new, very explicit way to guard against these imbalances. And Parul, what about the UK? How is the Eurozone crisis affecting monetary policy there?
So UK has been following a very loose monetary stance. They started slashing rates in 2008, and currently the rate is at 0.5%, which is at a historic low. And in terms of quantitative easing, they have been going for that, and they recently extended it in Feb by 50 billion pounds and over 3 months. And actually we expect another round of quantitative easing in May, but of a smaller amount, around 25 billion. But definitely a stronger growth outlook and improvement in risk perception could derail the QE path, QE plans. But overall, the bias in the country for monetary policy is towards more loosening rather than less. And this particularly comes from because the country is going for fiscal consolidation, massive fiscal consolidation, which was front-loaded. So this, in a way, is to support the economy during tough times. So, Mikko, going back to Norway, what's the current rate, the bank rate over there, and what's the outlook for rate going forward?
Yeah, so now after the cut, it's 1.5%, the side deposit rate, which is the key policy rate in Norway. And as we highlighted in the latest outlook, this decision would be a close call as it was. And given all the factors I've highlighted earlier, we now expect it to remain on hold for over a year. And the next move would be then in the latter half of 2013 would be a hike.
Thank you, Mikko.
Thank you, Parul.
Thanks for joining us. Please browse roubini.com for more insights. Thanks.